Expat families often build wealth in illiquid assets. This may include property, private businesses, and long-term investment portfolios. When the owner dies, taxes and settlement costs may become due quickly, but the assets themselves may take time to sell. This creates a liquidity gap at the exact moment control is changing. Some families use insurance structures to create liquidity, support succession, and simplify cross-border wealth transfer. One structure often used for this purpose is Indexed Universal Life. My name is Shiraz Waheed and I'm the co-founder at Lepidus Wealth. And in this video, I'm going to explain what Indexed Universal Life is, why expats use it, how it works, and where it fits within a broader cross-border wealth structure. Indexed Universal Life, or IUL, is a life insurance policy with a savings component. You pay premiums into the policy and part of that pays for insurance while the other part builds the value inside the policy over time. The policy also includes a death benefit. So when the insured person dies, the policy pays out a lump sum to the beneficiaries. This payout is one of the main reasons expats use IUL structures because it creates immediate liquidity when wealth transfers. Alongside the insurance components, the policy builds cash value. This value can grow over time based on the performance of the market index. The money is not invested directly into the market, but returns are linked to index performance under the policy terms. This means the structure combines insurance protection, long-term value accumulation, and liquidity at the time of transfer. Many expats hold most of their wealth in assets that cannot be sold quickly. Property takes time to sell. Business shares may not be liquid, and investment portfolios may not be ideal to sell at short notice. When inheritance tax or settlement cost arises, families need liquidity quickly. Without liquidity, assets may need to be sold under time pressure. This is one of the main problems IUL is used to address. The policy creates a payout at death, and this liquidity can be used to pay taxes, settle liabilities, or support beneficiaries. This reduces pressure to sell property, exit investments, or restructure business ownership. Another reason expats use IUL is the long-term value growth. The policy builds value over time based on market index, allowing money inside the policy to grow while remaining inside an insurance structure. The flexibility is also part of the appeal, as you can choose beneficiaries, adjust funding, and in some cases access the value inside the policy, allowing the structure to support both wealth transfer and long-term wealth planning. Now, when it comes to how the IUL works, first, you fund the policy through regular or lump sum premiums. Part of each payment goes towards insurance and the rest builds value inside the policy. Over time, the policy value grows based on market index. If the index performs well, the value inside the policy increases according to the policy terms. And if the index performs poorly, growth may be limited depending on how the policy is structured. As the value grows, the policy can support a larger death benefit, meaning liquidity availability to beneficiaries may increase over time. Some structures may also access the value inside the policy through withdrawals or policy loans, depending on the provider rules. This creates flexibility, but must be managed carefully so the policy remains sustainable. IUL is generally designed for long-term use, as early years may include higher cost and the structure typically becomes more efficient over time. For expats, the policy is often used as part of a wider wealth structure. It may sit alongside holding companies, foundations, or trusts with the objective of creating liquidity while keeping long-term assets intact. Ownership of the policy matters. If it is held personally, it may form part of the personal estate depending on the jurisdiction, while ownership through a structure can create centralized control and improve continuity. That structure can include a trust or a foundation, such as DIFC or ADGM foundations. Beneficiaries can also be chosen in advance, and the payout can go directly to the family members or in a trust or a foundation structure that continues holding the assets. This helps keep control and make the transfer smoother. Tax treatment of IUL is based on residency and jurisdiction. In many countries, growth inside a properly structured policy is not taxed each year, which allows value to compound over time, although some jurisdictions still require reporting, so the structure must be aligned with where you live. The death benefit is also typically paid directly to the beneficiaries, which can help avoid delays and provide immediate liquidity at the time of transfer. Although the exact treatment still depends on ownership and structure. Because expats often move between countries, the policy should be structured with relocation in mind, so consistency is maintained as residency changes. No insurance structure removes tax automatically, but when structured properly, IUL is commonly used to improve tax efficiency, provide liquidity, and support smoother wealth transfer. One of the defining features of an IUL policy is the ability to access value through the policy loans. Instead of withdrawing money and reducing structure, you can borrow against the policy value. This allows you to access liquidity while keeping the policy in place. The borrowed amount is secured against the policy, and the remaining value continues to stay invested within the structure. This means you can access funds without selling investments or disrupting the long-term planning. Policy loans are commonly used for income planning, large purchases, and temporary liquidity needs. For example, expats may use policy loans to fund property purchases, support business investments, or create supplemental retirement income. Because the funds come from a loan rather than a withdrawal, the underlying policy structure remains intact. This helps maintain the long-term death benefit and overall planning objective. Another advantage is flexibility. Policy loans are not tied to bank approvals, income checks, or external credit decisions. The liquidity comes directly from policy value. This creates a private source of liquidity that can be accessed when needed. The loan balance is typically settled later from the policy value or death benefit, depending on how the structure is managed. This is why policy loans are often positioned as a liquidity layer during the lifetime, while the death benefit provides liquidity at transfer. Together, they allow the policy to support both long-term wealth transfer and controlled access to fund during lifetime. Now, there are a few key benefits expats typically look for when using an IUL structure. The first is liquidity, as the policy creates liquidity when wealth transfers and help covers taxes and costs without selling core assets. Another benefit is continuity, because property, businesses, and long-term investments can remain intact while liquidity is provided separately. The structure allows value to build over time, with the policy value linked to a market index, supporting long-term planning. Flexibility is another advantage. Since beneficiaries, funding, and access can be adjusted over time, the IUL can also sit alongside trust, foundations, or holding structures, allowing it to fit within a broader wealth plan. Now, IUL is not designed for short-term use, and if liquidity is needed quickly, other solutions may be more suitable. The structure also requires long-term funding, and if premiums are stopped early, performance may change. Tax treatment also varies if residency changes frequently, which is particularly relevant for expats moving across jurisdictions. For some families, simpler insurance or investment structures may be appropriate, and the right approach depends on objectives and time horizon. IUL works best when used as part of a broader expat planning strategy focused on liquidity, continuity, and controlled wealth transfer. So if you are an expat building long-term wealth and want to understand whether an indexed universal life insurance or IUL fits in your overall wealth planning, you can request a personalized asset protection plan using the link in the description below. That's it for today, and I will see you in the next video.